Ready, set, recycle, because we'll be uncovering why Aduro is gaining more and more attention. By looking at their history, ongoing progress, and future plans, we'll outline the potential of their idea and cover some reasons it may receive overstated reactions from supporters and detractors. Aduro has made a name for itself by developing a flexible chemical recycling platform featuring 3 unique technologies: hydrochemolytic plastics upcycling, hydrochemolytic bitumen upgrading, and hydrochemolytic renewables upgrading. Interestingly, the company is based in Ontario, Canada, and initially focused on developing, marketing, and acquiring software in the investment and securities trading industries. However, they later shifted their focus to clean technology and entered into a letter of intent to acquire all shares of Aduro Energy Inc., which became a wholly owned subsidiary after a share exchange. At first, the founders developed hydrothermal upgrading technology for heavy oils, but discovered its potential in plastic and rubber tire upcycling and renewable oil upgrading. What eventually came to be known as hydrochemolytic technology is a platform that enables the transformation of lower-value feedstocks into higher-value chemicals and fuels using water's unique properties. The technology is purportedly highly efficient and versatile, operating at low temperatures and supporting multiple applications in sectors such as plastics upcycling, bitumen upgrading, and renewables upgrading. Through hydrochemolytic technology, the company aims to address pressing global issues like waste management and environmental impact by offering greener alternatives to traditional petroleum processing methods. This patent-protected technology is founded upon 7 granted US-based patents and 1 pending US-based patent. Currently, the company is scaling up its technology to a commercial process for plastic and bitumen applications, facing challenges such as performance under real-world conditions, rapid advancements in technology, securing funding, and handling solid or semi-solid feedstock. They are addressing these challenges through early-stage connections with prospective customers and potential partners, aiming for guidance in their technological and business development while seeking endorsement from reputable organizations. Specific technological hurdles being addressed include issues with mass and heat transfer, equipment design, handling solid or semi-solid feedstock, and high contamination levels in waste plastic. The company intends to monetize its platform primarily through licensing, royalties, and research and development, but is investigating other business models. They believe monetization of their platform through a licensing model reduces the need for capital. They plan to develop commercial partnerships via demonstration projects, aiming for long-term customer relationships. After completing its first milestone related to receiving reports on Aduro Energy's patented chemical conversion technology, certain special warrants were distributed and later converted into common shares upon achieving specific milestones, leading Aduro to then pursue several business objectives that need to be met within 4 years of Aduro acquisition closing in order to achieve the second milestone. The milestones involve financial transactions, production and ownership of a manufacturing plant, license agreements, equity investments, maintaining market capitalization, public or private offerings, and acquisition agreements. In order to reach these goals, there are ongoing projects and partnerships related to the company's hydrochemolytic technology. A partnership with Brightland's Camelot campus aims to install an installation demonstrating the conversion of post-consumer polyethylene into useful feedstock for chemical processes using hydrochemolytic technology, offering advantages over traditional pyrolysis methods. Another partnership with Camelot Innovation and Learning Labs, CHILL, focuses on optimizing the company's next-generation chemical recycling platform and accelerating commercialization through experimentation programs at Brightlands. The CHILL engagement provides access to skilled researchers, specialized equipment, and additional services while maintaining ownership of all intellectual property generated from these projects. Lastly, the establishment of Aduro Clean Technologies Europe BV as a European subsidiary aims to advance the hydrochemolytic process for plastics upcycling within the region by constructing a future demonstration unit at the Brightlands site. Also, back in November 2021, the company started discussions with Switch Energy Corp to collaborate on designing, building, installing, and operating a pilot plant for processing waste polyethylene and other types of plastic waste like polypropylene and polystyrene. By March 29, 2022, they had entered into a letter of intent. The project has 3 phases: pre-treatment process development and testing, Phase 1, pilot plant construction, Phase 2, and post-pilot commercial expansion planning, Phase 3. The aim is to demonstrate the benefits of hydrochemolytic technology in handling agricultural waste plastics while avoiding associated environmental costs. Although the collaboration provides an opportunity for cost-effective solutions, no formal relationship with Switch Energy is guaranteed after completing the project. Elsewhere, Aduro and Western University are working on a joint research project called Tuning Supercritical Fluids for Polymer Recycling to Monomers and Chemicals. The project was approved and awarded $1.15 million in non-repayable funds by NSCIRC Alliance and MyTax Accelerate Grants Program. Over 3 years, Aduro will contribute $382,500 plus tax, with NSCIRC and MyTax contributing a total of $1,147,500. The research team began working on Year 1 deliverables, including a review of literature on intrinsic and extrinsic contaminants in plastics, and designing a VUE cell reactor system. Deliverables generally include detailed reports covering technology performance, key parameters, economic and environmental considerations. The ultimate goal is to determine the interactions and product quality of mixed plastics for upcycling. On a related note, Aduro achieved the completion and mechanical assembly of a pilot-scale hydrochemolytic continuous flow plastic (R2) plastic reactor. The R2 plastic unit is designed to handle various plastic feedstocks and evaluate their impact on materials found in multilayer plastics, advancing plans for processing higher contaminated materials. This data will support the scale-up and optimization program for the next-generation reactor. The company also announced that they started the commissioning phase of the pilot-scale R2 plastic reactor, which successfully received all regulatory compliances and is currently operating at their pilot site in Sarnia, Ontario, for research and development and customer engagement purposes. Aduro was also accepted into the Shell Game Changer program, an accelerator program designed to evaluate and mentor early-stage businesses developing innovative solutions in energy transition. The company plans to apply its hydrochemolytic technology to produce sustainable naphtha cracker feedstock from polyethylene and polypropylene, or convert polystyrene into useful platform chemicals. The Shell Game Changer program contributed non-dilutive funding spread over 6 project phases, provided technical expertise for process design and optimization, and mentorship in commercial strategy development. The program aimed to reduce developmental risk and support rapid commercialization. For now, there are no ongoing commitments or future agreements with Shell plc or the Shell Game Changer program. For even more projects and partnerships in the future, Aduro rolled out its Customer Engagement Program, CEP, by adding 2 new participants interested in evaluating their technology. The CEP enables potential customers to gain deeper knowledge about the technology, discuss specific needs, and collaborate on future projects. It involves connecting with prospective customers and partners at an early stage to provide guidance for the commercial development of their technology and business. The CEP has 3 stages: technology evaluation, collaboration, and commercialization. Currently, all relationships are in the technology evaluation and collaboration stages, without any definitive partnership or material collaboration agreements in place. Engagement is largely driven by ongoing purchase orders with specific technical deliverables for each engagement. The company considers these engagements as normal course evaluations of their technology, and there are no guarantees that further work or agreements will result from existing relationships. The CEP showcases the real-world potential of hydrochemolytic technology, demonstrating its effectiveness on specific plastic waste types produced by multinational companies in food packaging and building materials sectors. Currently, all these partnerships are at the technology evaluation stage with ongoing purchase orders for non-material and confidential payments made to the company in exchange for evaluation data provided back. This data supports their established scale-up program and advances the design and construction of subsequent tons-per-day continuous flow reactor units. The insights gained contribute to creating solutions tailored to meet unique industry sector needs and challenges. However, no definitive partnership agreements have been established as of yet. CEP is also meant to access complementary knowledge from established organizations. Their main focus lies within petrochemical companies seeking circular feedstock, waste management companies optimizing waste value, users of plastic goods facing extended producer responsibility, and resource companies needing ways to convert bitumen into more valuable products. Potential customers include refineries, polymer producers, energy companies, remote communities, waste collection companies, municipalities, and governments. For bitumen upgrading, the technology addresses heavy oil industry challenges, providing environmental benefits and increasing net pipeline capacity. Key potential customers are Canadian and international heavy oil producers and refineries. Lastly, renewables upgrading offers a scalable solution for transforming renewable oils into motor fuels and specialty chemicals. Potential customers encompass ethanol producers, seed crushing plants, biodiesel plants, farmers, and poultry and beef producers. Some key selling points of Aduro's technology are their use of subcritical water, low-cost catalysts, and a chemical agent to promote selective carbon-carbon bond scission in hydrocarbons in their hydrochemolytic technology platform, which allows for advantages over existing processes such as reduced capex, higher profitability, higher yields, and more flexible feedstocks. While there's no direct commercial competition employing this method, the company faces competition from established blending, upgrading approaches, and various recycling processes in different industries, the main competitor being pyrolysis-based technologies. However, Aduro asserts their unique combination of chemical reactions used by their technology offers better performance compared to existing methods. As with other companies in the recycling and waste management sector, the company's operations are subject to environmental, health, and safety regulations in various jurisdictions. The regulatory landscape is evolving, with key trends supporting chemical recycling, mass balance approach, minimal recycled content requirements, and extended producer responsibility, EPR regulation. These developments could also be favorable for Aduro, as its technology operates under mild conditions with non-hazardous waste streams. Although there may be some negative impact from the evolving regulatory environment, the company believes that future regulations will increase demand for their technological solutions. On the flip side, Aduro and its peers in the industry can face pressure if they breach laws related to the handling of regulated substances, emission control, and occupational health and safety. The company operates under federal, provincial, state, or municipal laws, with varying standards across jurisdictions. Any delay or failure in obtaining required approvals and permits can negatively affect operations and result in fines or enforcement actions. The company anticipates stricter legislation and increased penalties, which could lead to additional costs, liabilities, or operational changes. Aduro has also mentioned potential future needs for the company to raise additional funds for business operations or to finance acquisitions, possibly via debt or equity securities issuance. It notes the possible negative impact this could have on business growth, as well as uncertainties regarding availability and terms of such financing. Other concerns raised pertain to increased costs due to operating as a U.S. public reporting company and maintaining a dual stock listing, including additional expenses related to legal and accounting needs, and management time spent on compliance initiatives mandated by the Sarbanes-Oxley Act and SEC rules. Then, since this company's main draw is innovation and invention, things like intellectual property infringement claims, competitors holding patents or copyrights, and the need for ongoing investment in patent applications pose greater threat. The company's business may be negatively impacted if they are found to have infringed on third-party intellectual property rights, resulting in increased operating expenses, possible cessation of technology development, rebranding efforts, and potential legal disputes. Furthermore, there is a risk that pending patent applications might get rejected by the U.S. Patent and Trademark Office due to subjectivity in the examination process, which can lead to wasted resources and delays. The company's continued success also depends on retaining and attracting key personnel who possess valuable knowledge related to their technology and business operations, including, for example, researchers involved in their collaborations and partnerships. As for more macro factors, Aduro acknowledges vulnerabilities in profitability and financial stability due to fluctuations in commodity prices, particularly for renewable fuels. External factors like interest rates, inflation, supply of raw materials, exchange rates, investment patterns, monetary systems, and political developments contribute to these price changes. Recent diesel fuel price fluctuations also pose risks for commercial production. These market conditions could make refining uneconomical or result in short-term losses from increased feedstock costs or dropping renewable fuel prices. When moving ahead, Aduro will have to keep these factors in mind alongside the ongoing process of refining hydrochemolytic technology and gaining greater market acceptance. For more on Aduro and other companies, follow Ascencore. Thanks for watching and have a nice day.